All right, everyone, buckle up because today we're going deep into the heart of Forex trading.
To the dark side.
Yeah, exactly. We're talking about the stuff that can give even seasoned traders nightmares.
Right, the unexpected twists and turns that can turn a promising trade into, well, a financial horror story.
You've shared some pretty wild stories and sources with me, actually. It sounds like a lot can go wrong in the Forex world.
Oh, absolutely. But the key is to understand these potential pitfalls, these Forex nightmares, so to speak.
So you can avoid them.
Exactly. Knowledge is power, right?
Right. So where do we begin? What's the first monster we need to slay?
Well, one of the most common and potentially devastating is something called slippage.
Slippage. Okay, I gotta be honest, that sounds kind of slippery. What is it exactly?
Imagine this. You're ready to pounce on a great trade, you see the price, it looks perfect, and you hit buy.
Got it. Feeling good. Confident.
But then, bam! Instead of getting the price you saw, the order executes at a much worse price.
Ouch. So wait, I think I'm getting a bargain, but end up paying more?
Exactly. And that difference between what you expected to pay and what you actually paid, that's slippage.
Tricky. How does that even happen?
Well, it often happens when things get a little wild in the market, like during volatile periods when prices are bouncing all over the place,
Right.
or when there aren't enough buyers or sellers at your desired price, which we call low liquidity.
So it's almost like the market's playing a game with you. Shows you one price and then pulls a switcheroo.
That's one way to put it. And those games can cost you big time. It can eat into your profits or even worse, cause an instant loss.
Okay, so how do we avoid this slippage monster? What are our weapons of choice?
One of the best defenses against slippage is to use limit orders.
Limit orders, as opposed to...
Market orders. With a market order, you're essentially saying buy or sell at whatever the price is right now, which leaves you wide open to slippage.
Especially, you said, during those crazy volatile times.
Exactly. But with a limit order, you set a specific price you're willing to buy or sell at.
Ah, so it's like setting a boundary, telling the market, nope, I'm not going above or below this point.
Precisely. Of course, there's no guarantee your trade will execute. If the market misses your limit price, you might miss the opportunity.
Ah, I see. So there's a trade-off. Safety versus potential gains.
Right. But at least with a limit order, you're protecting yourself from overpaying or selling too low because of slippage. You're managing that risk.
Okay, limit orders. Got it. Now, you mentioned that news events can really throw a wrench in things. That sounds like another Forex nightmare waiting to happen.
Oh, it definitely can. You can do all the analysis, feel really good about a trade, and then some unexpected news drops, and boom, everything changes.
It's like you're sailing along smoothly, and then a sudden storm pops up out of nowhere and throws you completely off course.
Perfect analogy. Do you remember the flash crash of 2010?
Vaguely. Refresh my memory.
So the U.S. stock market, and this is relevant because it illustrates the interconnected nature of global markets, took a massive nosedive. We're talking billions of dollars in value wiped out in minutes. It was incredibly rapid and completely unexpected.
Wow, that's intense.
And while we're still not 100% sure what caused it, it seems like it was a perfect storm of high-frequency trading algorithms going haywire and a lack of liquidity.
So even in a well-established market like the U.S. stock market, this kind of stuff can happen.
Absolutely. Which brings us to the big question. How can Forex traders prepare for those news-driven surprises? Because, let's be honest, you can't predict everything.
Right. If we could predict the future, we'd probably all be sipping cocktails on a beach somewhere.
Exactly. So the key is risk management.
Okay. Risk management.
First and foremost, stay informed. Keep your eye on economic calendars. They list all the upcoming economic announcements and data releases.
Economic calendars. Where do we find those?
They're everywhere. Financial news websites, specialized Forex resources, you name it.
Okay, so I should basically be checking these calendars religiously. Anything in particular I should be looking for?
Focus on the events that could directly impact the currencies you're trading. So, for example, if you're trading the euro, pay close attention to any announcements from the European Central Bank.
Makes sense. It's like checking the weather forecast before leaving the house.
Exactly. You can't control the weather, but you can at least bring an umbrella if you need to. And in Forex, that umbrella is risk management.
Okay, I'm liking this analogy. So staying informed is step one. What else can we do to prepare?
Don't forget about stop-loss orders. We touched on them earlier, but they are absolutely vital for managing news risk.
Right, the safety net. Remind me how those work again.
A stop-loss order automatically closes your trade if the price moves against you by a certain amount. It's like saying, if things start going south, get me out before I lose too much.
So if I'm worried about a news announcement tanking a currency, I can set a stop loss just below my entry point.
Exactly. It limits your potential losses. Of course, stop-losses aren't perfect. Especially in super volatile markets, you might still experience some slippage.
All right, back to that slippery monster. But at least stop losses can help minimize the damage.
Absolutely. They're essential for any trader, but especially crucial when news events are shaking things up.
This has been really eye-opening. We've covered some tricky territory slippage, surprise news events, all that good stuff. But we've also learned some valuable strategies to navigate those challenges.
Exactly. And that's the point. Forex trading, like any investment, has its risks. But by understanding those risks, by having the right tools and strategies in your arsenal, you can trade with a lot more confidence and hopefully fewer nightmares.
So to all our listeners out there, even though the Forex market can sometimes feel like a haunted house with scary surprises around every corner, don't let that scare you off. With the right knowledge and preparation, you can conquer those fears and enjoy the exciting world of Forex trading.
And maybe even make some money along the way.
Exactly. So sleep tight, everyone, and don't let those Forex nightmares bite.